Do you want to succeed in trading in 2026? Then there is something you must understand first. Not indicators, not signals, not secret strategies. You must understand how trading really works. Because in 2026, the market will not reward beginners who are guessing. It will reward disciplined traders who understand risk, psychology, and structure. Trading is not gambling. It is not luck. It is not about getting rich overnight. Trading is a skill, and like any skill, it requires knowledge, practice, patience, and emotional control. If you truly want to succeed in trading in 2026, you must stop thinking like a gambler and start thinking like a risk manager. The first thing you need to understand is this: trading is a probability game. There is no strategy in the world that wins 100% of the time. Even the best professional traders lose trades. The difference is that professionals control their losses and let their winners grow. Most beginners focus only on how much they can make. Successful traders focus on how much they can lose. If you risk too much on one trade, one mistake can destroy your account. That is why professional traders risk only 1% or 2% of their capital per trade. If you have $1,000 in your account, you should not risk more than $10 to $20 per trade. That may sound small, but consistency beats aggression. In 2026, volatility will still exist. Markets will still move because of news, interest rates, inflation, geopolitical events, and economic data. If you do not understand why markets move, you will always react emotionally instead of strategically. You must understand that price moves because of supply and demand. Buyers push the price up, sellers push the price down. Charts are simply visual representations of that battle. Support and resistance levels are not magic lines. They are zones where buyers and sellers previously showed strong interest. When price returns to these areas, reactions often happen again. That is structure. That is logic. That is market behavior. If you want to succeed in trading in 2026, you must stop jumping from strategy to strategy. Many beginners try one strategy for a week, lose a few trades, and immediately switch to another one. That creates confusion and inconsistency. Choose one simple strategy. Master it. Backtest it. Understand its strengths and weaknesses. Every strategy has losing streaks. The goal is not to avoid losses. The goal is to manage them. Another critical truth is leverage. Leverage is powerful. It allows you to control a large position with a small amount of capital. For example, with 10x leverage, $100 controls $1,000. That can multiply profits, but it can also multiply losses. In 2026, many traders will blow accounts because they misuse leverage. They open oversized positions hoping for quick profits. When the market moves slightly against them, their account disappears. Do not chase fast money. Build stable growth. Compounding is more powerful than high risk. If you grow your account by just 5% per month consistently, that becomes over 60% in a year. Discipline creates exponential growth. Another thing you must understand is psychology. Trading is 80% psychology and 20% strategy. You can have the best strategy in the world, but if you panic, overtrade, revenge trade, or break your rules, you will fail. Fear and greed are the two biggest enemies of traders. Fear makes you close winning trades too early. Greed makes you hold losing trades too long. You must create a trading plan before entering the market. Define your entry, your stop loss, and your take profit. Once the trade is placed, let the plan work. Do not interfere emotionally. In 2026, technology will continue to grow. More traders will use AI tools, automated systems, and advanced platforms. But tools do not replace discipline. Tools amplify behavior. If your behavior is bad, technology will amplify your losses. If your behavior is disciplined, technology will amplify your results. You also need to understand time frames. Scalping, day trading, swing trading, and position trading are different styles. Scalping requires fast decisions and constant screen time. Swing trading requires patience and broader analysis. Choose a style that matches your personality and schedule. Do not copy someone else's trading lifestyle if it does not fit you. Education is your foundation. Before risking real money, practice on a demo account. Learn how orders work. Learn how spreads affect entries. Learn how news events create volatility spikes. Understand what slippage is. Understand how risk-to-reward ratios work. A good risk-to-reward ratio is at least 1.2. That means if you risk $10, your target should be at least $20. With that structure, you do not need to win every trade to be profitable. If you win 50% of your trades with a 1.2 risk-to-reward ratio, you are already profitable over time. That is mathematics. That is probability. Stop looking for shortcuts. There are no shortcuts in trading. In 2026, social media will still be full of screenshots of profits, luxury cars, fast success stories. But what you do not see are the losses, the years of learning, the blown accounts before mastery. Focus on process, not outcome. Track your trades in a journal. Write down why you entered, why you exited, and how you felt during the trade. Over time, patterns will appear. You will discover your weaknesses. Maybe you trade too much during news. Maybe you move your stop loss when price gets close. Awareness leads to improvement. Capital protection is your first job as a trader. Not profit, protection. If you lose your capital, you are out of the game. If you protect your capital, you can always trade another day. Also understand that trading is not a salary. Some months will be positive, some months will be negative. Think long term. Think in years, not days. In 2026, the traders who will succeed are those who think like business owners. Treat your trading like a business. Have rules, have structure, have review sessions, have performance analysis. Do not trade when you are tired. Do not trade when you are emotional. Do not trade out of boredom. Trade with intention. The market does not owe you anything. It does not care about your needs, your bills, or your expectations. The market simply moves based on order flow and liquidity. You must adapt to the market. The market will not adapt to you. Another important factor is patience. Many beginners open trades because they want action. Professional traders wait. Sometimes they wait hours, sometimes days. High-quality setups are rare. Low-quality setups are everywhere. Quality over quantity. If you take fewer trades but higher probability setups, your results will improve dramatically. Understand drawdowns. Every trader experiences periods of losses. That does not mean your strategy is broken. It may simply be normal statistical variance. That is why proper risk management protects you during losing streaks. If you risk 10% per trade and lose 5 trades in a row, you are down 50%. That is extremely hard to recover from. But if you risk 1% per trade and lose 5 trades, you are down only 5%. That is manageable. Small risk equals survival. Survival equals opportunity. In 2026, information will be everywhere, but clarity will be rare. Do not consume random strategies daily. Build depth, not noise. Master the basics: market structure, trend direction, support and resistance, risk management, psychology. These principles worked 10 years ago. They work today. They will work in 2026. The market evolves, but human behavior does not. Fear and greed remain constant. If you truly want to succeed in trading in 2026, commit to long-term improvement. Accept losses as part of the journey. Control risk. Follow your plan. Stay consistent. Success in trading is not explosive. It is gradual. It is built trade by trade, month by month, year by year. You do not need to be perfect. You need to be consistent. You do not need to win every trade. You need to manage every trade. You do not need a secret strategy. You need discipline. So ask yourself, are you ready to treat trading like a profession? Are you ready to think in probabilities? Are you ready to focus on risk before reward? If the answer is yes, then 2026 can be your breakthrough year. But it starts with understanding this. Trading success is built on risk management, psychology, patience, and consistency. Master these, and the profits will follow. Ignore these, and no strategy will save you. The choice is yours.